Well, I think at the end of the day, decentralization is key. We ran a centralized company, and that comes with certain risks, especially when you're in an industry that's trying to completely upset the way things are done. And so, yeah, we were a centralized company. There's laws, we broke them, and we suffer the consequences. It's one of the reasons why I love decentralized protocols, is because you're able sort of to take the human element out of it, take the Arthur Hayes or the CZ, the Sam Bankman-Fried away, and it's literally just about, do I serve customers? Do I have good technology? Is it transparent and open and all these sorts of things, rather than having these company specific issues, these people specific issues.
A thrilling Bitcoin bull run is on the horizon, and it's about far more than just rising prices. It's the start of a financial revolution. Blockchain technology is fundamentally reshaping how we think about money, moving toward a world where finance is secure, accessible, and, most importantly, controlled by the people. Few understand this transformation better than Arthur Hayes, co-founder of BitMEX, who has dedicated his career to building a decentralized financial system. For Hayes, this journey began with a deep distrust of traditional finance, sparked by the 2008 financial crisis. As he watched giants like Lehman Brothers collapse and Deutsche Bank's balance sheets unravel, Hayes saw the risks and fragility of centralized control. Now, with Bitcoin primed for a major bull run, Hayes' journey stands as a powerful testament to the disruptive force of decentralized finance. This isn't just another market rally, it's the beginning of a financial revolution that's here to stay, with traditional finance on notice. Let's watch clips from Arthur Hayes' interview for deeper insights. Please like, subscribe, and turn on notifications for exclusive content. Thanks for joining us again. Enjoy the video.
No, so I was one of the founders of the Hong Kong Bitcoin Association, and it was this all types of people with finance, developers, just meeting in a bar in Hong Kong, talking about Bitcoin and crypto back in the day. Obviously, it's a lot bigger organization now, but that sort of like spoke to me, because I did have this distrust of the financial system, having lived. My first day on the desk was Lehman went bankrupt in 2008. And Deutsche Bank was one of the few banks that didn't take a government bailout. However, Deutsche Bank lied about its entire balance sheet. That's why they didn't take a bailout. And obviously, it's one of the worst performing banks over the ensuing years. Contrast that to the American banks, which all took government bailouts, paid massive bonuses the next year and following years. And so you see the difference of like, oh, I thought this was supposed to be free markets, capitalism, but it's just another socialist experiment. And your wealth is predicated on how well you can suck the government teeth. Genesis of the perpetual swap, and I'd like to tell us to a lot of founders, is that, so me, Ben, and Sam, my co-founders, we answered every single support ticket ourselves. And there's only one or two other employees back in May 2016. And so this takes up a lot of our day, answering questions from customers. But it gives us an insight into what the problems are with our product. And we get the similar sort of question a lot, which was, hey, BitMEX, are you guys scamming me? I had this position, and on this thing called an expiry day, it disappeared. They didn't understand what an expiry was for a futures contract. Oh, hey, BitMEX, why does the futures contract trade at a much different price than the spot market? Is this a scam? They didn't understand interest rate parity and why a futures contract trading in the futures should trade at a different price than the spot price today. So internally, we had this dialogue. Was like, we're getting all this feedback from customers. They don't understand our product. They're slagging us off on the forums and the internet, saying that we're bad dudes and running this bad platform. Is there a way that we can create a financial product that mimics margin trading, has very high leverage, but doesn't expire? And so that was a challenge. And so, we knocked our heads around and sort of we came up with this swap concept. The first iteration of it, we used the Bitfinex interest rates. And back in sort of May, June 2016, crypto was, I think it was like $300 or $400, whatever it was, and it was rapidly appreciating. And the interest rates weren't high enough to convince people to come in and sell this product. So we had this massive divergence in terms of the swap price versus the underlying spot price. So we went back to the drawing board and we came up with this sort of self-correcting mechanism, which is the innovation here, really, which is looking at the previous premium over the last 8 hours and charging that as an interest in the next 8 hours. And this is the completely new thing called the perpetual swap. And we rolled this out one day. We just
those are the
announced
funding rates you're talking about, right?
funding rates. So we changed the funding calculation, and the market hated it. There's a massive reaction. People are, what the fuck are you guys doing? We like futures contracts. Just do it like OK Coin. Why are you guys trying to be different? And, there's even people internally who are like, at BitMEX, like, why? Let's just go back to futures. The customers don't like it. And I was very adamant that we have to do this. This is solving a problem that we all recognize. Let's stick with it. And we stuck with it. We kept tweaking things. And sort of, by middle of 2017, we're like, holy shit, this product is actually working. Our trading volume is going up. We're seeing a lot more activity on the platform. And that's sort of the genesis of the perpetual swap, and sort of the rest is history. It's the most successful crypto product ever, traded the most on every single exchange, and trillions of dollars in notional every year, because it solves a problem. High leverage, no expiry date. It looks just like margin trading, so the retail crypto trader can understand it intuitively.
With a Bitcoin price rally expected soon, Arthur Hayes highlights the vital role of decentralization in disrupting traditional financial structures. Reflecting on his past ventures, Hayes recognizes the risks of regulatory interference and praises Satoshi Nakamoto's anonymity, which protects Bitcoin's creator and its value from government influence. Hayes believes that while not every project requires decentralization, those resilient to government shutdowns must prioritize it carefully. Reaching Bitcoin's level of decentralization is challenging, often proving its strength only under pressure. Hayes stresses that authenticity is essential for projects claiming decentralization, though he acknowledges that not every venture needs it. A strong supporter of decentralized exchanges like Uniswap and Drift, Hayes considers whether these platforms could ever match centralized exchanges. However, he notes their distinct goals. Decentralized exchanges focus on price discovery, while centralized exchanges prioritize high-performance trading. Let's go back to the interview and watch more clips to gain insights from Arthur Hayes.
Well, I think at the end of the day, decentralization is key. We ran a centralized company, and that comes with certain risks, especially when you're in an industry that's trying to completely upset the way things are done. And so, yeah, we were a centralized company. There's laws, we broke them, and we suffer the consequences. It's one of the reasons why I love decentralized protocols, is because you're able sort of to take the human element out of it, take the Arthur Hayes or the CZ, the Sam Bankman-Fried away, and it's literally just about, do I serve customers? Do I have good technology? Is it transparent and open and all these sorts of things, rather than, having these company-specific issues, these people-specific issues. One of the best things that Satoshi ever did was never be outed as whoever they or he or she was, because now we don't attach sort of our opinion of whether Bitcoin is good or bad to a person. And the government can't go and arrest and put this person in jail for violation of whatever laws they said that Satoshi may or may not have violated. It's dependent on what you're trying to build. Some projects are predicated on decentralization. If you're trying to build the next social media platform that can't get shut down by a government authority, like what's happened to Pavel at Telegram, decentralization is key. You must be decentralized from day one, or you can land your private plane in Charles de Gaulle and get arrested for running a platform, right? Or you can be Elon Musk and get your platform banned in Brazil. So I think there's certain projects and products that have to be decentralized, and there's certain other things that are just using sort of the really secure public blockchain to build a centralized product, which is fine. It just depends on what you're trying to do. Be very clear about that. Don't try to be decentralized when you don't need to be. And if you're running a social media platform and you're trying to do centralization, then you might suffer some consequences.
Do you believe that we're going to get to that point where these decentralized networks are resistant to?
Well, I mean, most of them aren't
decentralized.
That's the thing, and we find that out only in times of extreme stress. We find out, okay, well, actually, that thing you said in the white paper is not true, because you were compromised in this particular fashion. So if decentralization is key to your business model, then you have to be all the way decentralized as if you were Bitcoin. That's the standard. It's very, very difficult. It's very, very hard to do that. It takes a long time, which is why your incentive mechanisms need to be very aligned with the actual people using it. It's not like, you do a massive ICO, you hand a bunch of tokens out and then think they're going to get decentralized. Like, it's a slow process. It's not overnight. And so, again, not everything needs to be decentralized is the thing. Most people think a lot of things need to be when they don't need to be. But then the things that actually need to be decentralized, people need to be honing in and making sure okay, does this actually make sense on what they're claiming they're supposed to be doing?
Do you have a favorite decentralized exchange?
Well, I am an advisor of Drift, so I have to. I'd be remiss in not stating that I think the team at Drift has built a very, very compelling product, especially in the derivative space. I have to say that Uniswap, which I don't own any Uni token, I think Hayden has done an extremely amazing job.
And do you think we're going to, DEX is, we'll get to the same sort of, quality that is available on centralized exchanges?
I don't know. We'll see. Again, what's your use case, right? Does the DEX need to be as high performance so that, Ken Griffin can go and rip off retail customers like he does in the traditional markets because of the latency aspects? Or is it, hey, I just want to have price discovery such that anyone with an internet connection can connect with other people and trade things free from anyone sort of impeding on their ability to do so? So it depends on the goals. I don't know if you're going to have sort of a high frequency trading shop being able to run the same strategies on DeFi. Maybe that's not something that we want to have happen. And if you want to run that stuff, stay over there in the TradFi world. We have a different sort of reason why we're building these protocols.
Arthur Hayes' insights on decentralization offer a valuable perspective as Bitcoin's next rally draws near. The introduction of spot Bitcoin ETFs in January 2024 triggered massive growth in the market, with net inflows now surpassing $24 billion and October alone seeing a remarkable $5.4 billion. Hayes has consistently underscored the power of decentralization to shield assets like Bitcoin from regulatory interference, a point that resonates as traditional financial products, such as ETFs, drive wider Bitcoin adoption. Moreover, Hayes praised Satoshi Nakamoto's anonymity for safeguarding Bitcoin's value from government meddling, noting that, while not every project requires decentralization, it's essential for those that can resist shutdowns. With regulatory clarity becoming a focal point in the upcoming U.S. presidential election, both leading candidates, Donald Trump and Kamala Harris, are advocating for more transparent digital asset frameworks. This shift, which aligns with Hayes' views on financial autonomy, has further boosted market confidence. Adding to the bullish outlook, technical indicators like the Golden Cross on October 27th have signaled a strong upward trend. Hayes remains a supporter of decentralized exchanges such as Uniswap and Drift, noting that while decentralized and centralized exchanges serve different purposes, price discovery versus high-performance trading, the increased interest in Bitcoin only strengthens the push for decentralized, resilient financial systems. Lee also emphasizes the possibility of forthcoming economic developments influencing Bitcoin's growth during November. The Federal Reserve's interest rate decision on November 7th is especially critical. A 25 basis point drop might boost market liquidity, boosting cryptocurrency assets. According to Lee, a rate drop might dampen the present climb in the US dollar index and treasury yields, enhancing overall macroeconomic liquidity and potentially boosting crypto asset prices. Other interesting measures include CME's BTC open interest reaching an all-time high, showing strong demand for Bitcoin futures. Sustained inflows into Bitcoin ETFs, combined with a potential Microsoft BTC acquisition, might provide more support. Lee predicts that Bitcoin's price will range between $66,000 and $75,000 in November, with market volatility remaining strong. Do you believe decentralized finance, DeFi, will eventually surpass traditional finance in terms of adoption and usage, or will they coexist as complementary systems? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.